Hello traders, welcome back to the channel. Your trading is made easy with a level of clarity. Before we start today, I will want to say a very big congratulations to some of our viewers, the people that utilize this opportunity that we shared on Wednesday. If you had opened this trade, you must have closed it in a very beautiful profit. So congratulations to all of you that opened. Today is Sunday. Sundays we give top-down analysis and give you bias on what to expect in the market. And today we are going to be combining our analysis with DSY because currently dollar is actually giving some price action that is not properly defined. But today we are going to be seeing what is currently happening using our DSY. Why DSY means dollar index. This is what shows the behavior of dollar against other currency pairs. Whenever DSY is going up, it signifies something on other current dollar currency pairs. And whenever it's selling, it's also going to give some significant behaviors against other currency pairs. So stay with us in the end of this video, because at the end of this video, you will utilize your opportunity of winning more of your trade in the forex market. Without wasting time, let's begin. Now, today we are starting with USDJPY, and when you look at USDJPY, you will discover that this market has been in a very bullish movement. Before we start today, because this is top-down analysis, we are going to clear everything on the chart so that we can have that clear chart and have a very good analysis. So today we are going to be starting from weekly. Now, when you look at this, right, when the market was just at this particular place, I explained all the reasons why we should be expecting more bullish price action. Why? Because when you zoom out, you discover that USDJPY has been in a very bullish movement. And considering what our DSY was telling us on Wednesday, on Sunday rather, I explained all the reasons why we should be expecting more bullish price action. And that is exactly what USDJPY has been doing. When we move down to daily, we can see the kind of price action that USDJPY has been giving, creating series of higher highs and higher lows after we had that inversion of trend of creating series of lower lows and lower highs to now creating higher highs and higher lows. And whenever you see the market creating higher highs and higher lows, what do? You don't counter trend, rather you start looking for more opportunity to take the market to the upside. And that is exactly what USDJPY is currently doing. Now, when we look at this, remember, if you've been on this channel for some time, always study the behavior of every currency pair before you start making any position. Now, when you look at USDJPY, you will discover how USDJPY has been stylishly closing every gap left. Whenever the market gives any fair value gap, USDJPY comes back to close it. When you look at this, let's zoom a little so that you'll be seeing everything so well. When you look at it, we discover that every fair value gap left, USDJPY always come back to close it. And the same thing happened at this particular place. As you can see, we had that open price. USDJPY came back and closed it. Every gap left, USDJPY always come back to close it, including this particular gap that we are seeing at this particular place. And now currently, as we can see, the market has given us an open price range at this particular place. Remember, in our previous video, I explained all the reasons why we should be expecting the market to create a new higher high. I will suggest you go through our previous video because through it, you will learn a lot. So without wasting time, let's proceed. As you can see right now, this market has created a new high. When you zoom out very, very well, you will see that this market has actually closed above that particular high. Let's adjust a little. That is why it's very, very important to always zoom out. As you can see, this market has closed above this, and that is giving us more room why we should be looking for more continuation today upside. And considering what we are seeing on our DSY, which we are going to be looking at in just a moment. Now that we have this, what are we expecting? We're expecting more continuation to the upside, but there is no market that only goes to the upside like this without any form of retracement or retest of structure before continuation to the upside. And if this is your first time of being in this channel, I want you to always know this, right? Whenever you see market moving to the upside, creating series of higher highs and higher lows, one of the laws you have to understand is whenever a higher high is created, you are not expected to start looking for any other opportunity above here. Rather, you wait for that market to come down at least to retest a structure or at least come to 50% Fibonacci level before we start seeing more continuation to the upside. Now, and that is exactly what we're expecting on USDJPY currently. And coupled with what we are seeing, as you can see, the price of this market closed this particular place. And from here to here, we have that very good fair value gap, which we are expecting the market to close, which will now give us that confluence of what previous resistance turned to support. Because as you can see, whenever a resistance is broken, USDJPY always come back to test it as support. It happened at this particular place. Then we saw it happening just at this particular place. When that resistance was broken, then it turned to what? Support. Currently, this resistance is broken, and definitely we are likely going to see it turn to support. So having all this in mind, what do? We are now going to go to lower time frame to see what is happening in the market. So when we drop down to 4 hours, we can see that this market had already closed beautifully on 4 hours, creating that new highs, right? And when we see this, we can now identify that this market has given us this wonderful break of structure. Let's delete this. We have this beautiful break of structure, as you can see, right, internally, and this happened to be our external break of structure, right? Now, since we have identified this external break of structure and internal break of structure, what are we expecting? Now, if you have been on this channel for the first time, right, I want you to know this. Whenever you see the market moving to the upside, right, you see a market creating a low, without that low, sweeping a liquidity before creating a higher high, a market will always come to hunt this low, coming to fair value gap or other block before more continuation to the upside, and that is exactly what we're expecting on USDJPY, considering the fact that we now have a very new break of structure. And whenever there is break of structure, market always retest structure or make a liquidity sweep before more continuations to the upside. So having all this in mind, let's drop down to 1 hour. But before we drop that down to 1 hour, I want you to see that this previous resistance is likely going to turn to what? A support level. So when we drop down to 1 hour, we can see that this market right now is creating series of higher highs and higher lows moving to the upside. But when we look at this, we can see that every low created has swept liquidity. This low created here, okay, let's go to 30 minutes so that we can see everything very clearly. Now, when we look at it here, we can see that whenever we had that break of structure, as you can see, we had that break of structure at this particular place. What happened? The market came back with this wick, sweeping this internal structure before we started seeing that continuation to the upside. And as you can see, after we had that break of structure, the market came back also to take out this internal liquidity and minor liquidity before more continuation to the upside. And currently right now, you can see now that we have that break of structure at this particular place, right? And if we watch closely, we can see that this low that we are seeing here did not sweep any liquidity before that break of structure above here. So we can consider this to be a fake break of structure, right? So let's move down to 15 minutes. We can consider this to be a very good fake break of structure, which gives more room why we should be expecting this low to be taken as a liquidity before more continuation to the upside. Now, when we move back to 4 hours, remember, on 4 hours right now, we have a very good fair value gap. As you can see, this gap here has been covered with this particular wick that we are seeing at this particular place. But from here to here, we can see that fair value gap from here to here. And we can see another fair value gap from this particular place to this particular place. But from here to this particular place, we can't see that fair value gap existing. That means the market is likely to come down to fill these gaps before more continuation to the upside, and giving us that we now have that break of structure. So we should be expecting that sweep of liquidity to come and fill these gaps before more continuation to the upside. So having this in mind, now let's move down to lower time frame. When we look at this on 4 hours, we can see that we have a very good fair value gap and order block just below this. And if this is your first time of being in this channel, whenever we see any fair value gap with a very good order block below it, it makes that zone to be very, very strong. Now, when we move down to 1 hour, let's see what we have. On 1 hour right now, we can see that we have very good order blocks with fair value gap. Just watch and study what is happening here. There is no gap left here. Even when the market left this particular gap we are seeing here, what happened? Markets came back to cover those gaps. When we had that this particular little gap that we are seeing at this particular place, what happened? The market came back to fill everything before continuation to the upside. And when we had this particular gap that we can see just at this particular place, let's quickly zoom out. Just at this particular place, let's take this out, just here. We can see that the market came back and closed those gaps before moving to the upside. So this is giving more room why we should be expecting the market to come and fill those gaps before continuation to the upside. And when we look at it on 1 hour, we can now adjust, right, modify, and bring this to this other block that we are seeing at this particular place. Remember, this low swept liquidity. This particular low is swept that liquidity. So we are going to be considering this to be our very strong low, that we don't want to see the market going below it. So having this, remember, let me just adjust a little so that we see this better. Remember, this is top-down analysis. This is 2026, and I really want to see everyone successful, and I want to see you knowing how to analyze the market to utilize some opportunities in the market. This is the liquidity swept, right? When we go to lower time frame, you will see it more visible. So this is a very strong low that we don't want to see the market go below it. So let's move over to what we have. So currently, this is a very good order block that we have just at this particular place. Let's adjust this a little. Just at this particular place. And when we look at it, we can see a liquidity pool resting above it that the market would want to use as what? Inducement before more continuation to the upside. And when you take your Fibonacci level from the origination, from where this move originated to the highs, you will discover that that zone is this liquidity is above 0.5 Fibonacci level and 0.6, which is giving us more confluence why we should be expecting this low to be cleared before more continuation to the upside. So what are we expecting right now? We have this as a low and as a zone. And when we look at it, we can see that fair value gap just at this particular place, and giving it more confidence. So with this zone, this point of interest could attract the market price. So my first entry for the week is going to be at this particular zone. Remember, whenever you have any low with a week, any other block with a week, you treat all of them as one. Instead of you putting your stop loss just below this other block, you put it below this week, that is our strong low. Then where is our target? Our target, remember, don't be greedy in the market. 3-to-1 risk reward is very, very what? Okay in the market. Here will be my first take profit. Then I can be targeting above and higher for the market to take out that highs, that external highs, for the market to continue moving to the upside. Then my second point of interest is going to be just at this particular place. As you can see, this is a very good order block. And that other block is holding a very strong area of major liquidity above it. So we could also be looking for that point of interest at this particular place. For the week, this happens to be my second point of interest. Why am I taking this to be a point of interest? As you can see, it has that liquidity above it and it has this fair value gap above it. So the market could come to this particular place before before more continuation to the upside. So my first take profit is going to be 3-to-1 risk reward. Then I can target these external what highs. So on USD JPY, these are the things, these are my points of interest that I am expecting the market to play out. And why are we making all this analysis? Then when we go to our DSY, we can see that our DSY right now is giving us that buy signal. Let's zoom out. Now let's go to daily, right? Now, as you can see, the market is already moving to the upside. And what is DSY? DSY simply means dollar index. This is where we identify the strength and weakness of dollar. Now, whenever you see DSY moving to the downside, definitely dollar will always be low, be weak against other currency pairs. But whenever you see it moving to the upside, definitely dollar is now strong against other currency pairs. When you look at this, we discover that from here, this happened to be Friday, 21st November 2025. The market started coming down to this particular place, right? That means dollar happened to be weak. Then when you go to other currency pairs, such like GBP USD, you will discover that all this buy bullish movement that we are seeing started from the same Friday, 21st November, before we started seeing all this move to the upside. Then when we go to EURUSD, the same happening just at this particular place. As you can see, this happened to be the same Friday, 21st November 2025. We started seeing all this move to the upside. And currently, when you look at this right now, you can see that this DSY started buying on Wednesday, 24 December 2025. And when you look at GBP USD, you will discover that this market started selling here, started showing that weakness of selling on 24 December 2025. And when we look at Euro USD started selling from that same 24 December 2025. So this gives us a clue and a very clear message how DSY shows the strength and weakness of dollar. Now, what we are seeing right now is what more strength of dollar, because when we look at our DSY in my previous video, I recommend you go through my previous video because you will learn a lot from them. In my previous video, I explained all the reasons why we should be looking for more continuation to the upside on the strength of dollar if the market eventually closes above this. And what happened? The market has closed above it. Why? Because this high happened to be our strongest side that swept this internal liquidity. And whenever a high sweeps internal liquidity, we don't want to see that high to be what? For the market to go below or above it, because going below or above it shows a change of trend, because this high created this lower low, as you can see, giving us that confluence that this market is supposed to continue moving to the downside, but the market has gone above this. So we are now expecting that more bullish price action. That is on 4 hours. Then when we go to daily, we can see what actually happened at this particular place, right? This happened to be also a high that swept liquidity, right? We never wanted to see markets going above it because that high swept this internal liquidity. Let me zoom a little for everything to be more clear and understandable. Now, this high swept this internal liquidity, and we don't want to see the market going above it because after creating this internal liquidity, we had that lower low on 4 hours, right? What we never wanted to see is market going above this. And what happened? Market went above it and closed above it on 4 hours, which we are not going to be saying. And that gave that room for the market to have that big retracement to sweep internal liquidity. Just like I said a few minutes ago, whenever you see a market, right, created a very good higher high without those lows sweeping liquidity, market will come down to take out those lows and sweeping the liquidity before creating new higher high. And that is exactly what the market has done. When you go through my previous video, I covered all these moves. Our dollar index had already taken out this internal structure, and this internal structure, sweeping all this liquidity, coming to this other block, and the market have started reacting from that level. So giving us more confluence why we should be looking for more continuation to the upside on dollar pairs. So having known this right now, this is what is giving us more confluence why USDJPY has to continue moving to the upside because our dollar index is giving us that particular signal. So on USDJPY, these are my points of interest. And if the market opens and the market continue moving to the upside, you have nothing to worry about. On Wednesday, we are still going to update you. So on GBPUSD, I also have a very good setup. Now on GBPUSD, let's quickly go to weekly. Okay, we are going to clear our charts, or let's just clear a few things so that we don't need to explain much. Now on GBPUSD right now, okay, let's go to daily. On GBPUSD, as you can see, let's zoom out. We can see that this market has been moving to the upside. Then on weekly, the market got to this resistance level, right? As you can see, the market reacted from this very powerful order block after it must have taken out these highs, right? As you can see, the market started reacting to the downside. And when the market gave us that break of structure at this particular place, which we are going to see, right? The market now went up. Okay, let's go to daily for everything to be properly defined. Now, as you can see, the market was moving to the upside, creating series of higher highs and higher lows, moving to the upside. And at some point, the market created a high without that low sweeping any liquidity. Look at it there. This low that we are seeing here, this low, right, created this higher high that we are seeing without this low sweeping any liquidity. What happened? The market came back, swept that low as a liquidity. Let's identify it, giving us this low now that gave us that very valid break of structure, right? This happened to be a fake break of structure, and this happened to be a valid break of structure. Why? Because it swept liquidity before this break of structure. But what's happened? Remember, whenever a liquidity is taken, we don't want to see markets go below that low or above that high, depending on the direction you are trading. Now look at the strong low that swept liquidity before this break of structure. We never wanted to see the market go below this low because this happened to be our very strong low. What happened? The market went below it on 4 hours and closed above below it, giving us that confirmation of change of trend. And after this change of trend, the market created this liquidity that I covered a few months ago, while the market has to take it out. What happened? The market now created this liquidity pool, came down, and what happened? The market went up to take out that internal liquidity, coming to this other block that we are seeing at this particular place before this continuation to the upside. You can go through my previous video. I covered all this move from here to this particular place because I covered all of them, telling you the reason why we should be expecting this move to the downside. And as you can see, the market, after taking this internal liquidity, right, the market now started coming to the downside. And if this is your first time of being in this channel, whenever you see the market moving to the downside, creating choppy retracement without any deep retracement, whenever market wants to have a deep retracement, the market will take out all those internal structures, coming to other block of fair value gap before more continuation to the downside. And that is exactly what GBP USD is currently doing. Now, after this break of structure to the downside, which we covered, right, GBP USD now started a deep retracement phase, which has seen it taking out all these internal structures right now. All this internal structure has been taken, coming back to this fair value gap that we are seeing at this particular place, right? Reacting seriously from that fair value gap. We are expecting it to come to this other block that we have at this particular place, but currently the GBP USD decided to react from this fair value gap that we have at this particular place, and now we now have this bearish price action. So what are we expecting on GBP USD currently? Now remember, we had that change of trend at this particular place, right? And after every change of trend or break of structure, market always take liquidity before continuation to the right direction. So currently right now, since we have this, what are we expecting? And the market has reacted from this particular place. The next place that the market is likely to take out is this low. But remember, trading is reactive and not predictive. We react how the market reacts. So since we have this, what are we expecting? Now we need to go to lower time frame to know what we are expecting. So let's quickly delete this, and let's delete this for our chart to be more clear. So right now, let's go to 4 hours. We are now going to concentrate on things happening just at this particular place to know our next direction and line of action. Remember, higher time frame gives us the direction of the market, and lower time frame gives us what is currently happening and informed decisions. So currently, what are we seeing on 4 hours? We can see that on 4 hours, this market is still creating series of lower lows and higher highs and higher lows at this particular place. And for the first time, we are now seeing a lower low, showing us that sellers are gradually taking over from the buyers. So when we zoom out to see exactly what is happening, we can see how this low swept liquidity. Okay, first of all, let's identify this other block just at this particular place. Okay, nice one. So let's go to 1 hour to see what is happening. Now, remember, whenever we have any break or structure, markets always come back to take out some liquidity before anything. After this break of structure, right, the market came back to take out this internal liquidity because that low, let's identify it first, because that low broke structure to the upside without it sweeping any liquidity. What happened? The market later came down, gave us this liquidity, this low, right? Taking out all the liquidity, giving us this low before that continuation to the upside. And after sweeping the liquidity, the market now broke the structure to the upside. This happened to be a valid break of structure. And what we don't want to see is for the market to go below this. And currently, the market has gone below it, but we have not seen that candle close. Let's adjust it a little. As you can see, we have not seen that candle close. So, what are we going to expect? We'll be expecting a candle close just below this low. And once we see that candle close, that means the character of this market has changed. We are going to now start expecting more bearish continuation. Now, but since we have that, I want us to identify something here. And I'm going to be considering this to be a change of character for my own self for some reasons. Why? Because that low, this particular low, right? This particular low swept this internal liquidity that we can see at this particular place, because this low created break of structure internally, but the market came to take it out. So I could be taking this to be my change of character for some reasons, but for us to have more strong confirmation, we are going to be waiting for the market to go below this, close below it, before we start considering it as change of character. But I think the market is giving me that change of character internally. But remember, trading is reactive and not predictive. So this is our very strong low. We are now still going to wait for the market to go below it before we start taking those trades to the downside. So currently, what are we expecting? Now, currently, we are now expecting the market to continue moving to the downside if we see that candle close just below below this particular low. So once we see that candle close, we'll be looking for more continuation to the downside. But currently, what are we expecting? Let's look at what we have at this particular place. Let's go to 4 hours to see. Now, currently, remember, we have a very good order block at this particular place. So definitely, once the market closes below this low, we are going to see that reaction to lure people inside this market, why the market maker will liquidate them. So, but having that in mind, I want you to see something on daily time frame. Remember what I said earlier, whenever you are trading, you have to always study the behavior of any currency pair. Now, we already have those 4 candlesticks, right? These 4 candlesticks. On GBP USD cannot have steady more than 3 to 4 candlesticks without seeing that opposite candle appearing. Now, when you look at this particular place, you will see that immediately we had that 1, 2, 3, 4 candle, another opposite candle appeared. This bearish 1, 2, 3, another opposite candle appeared. Then 1, 2, 3, we started seeing those reactions. From here, we had that 1, 2, 3, 4. We saw this, we had this, we saw this. So since we now have these 4 bearish candles, we are now expecting some reactions at this particular place, right? Now, since we are yet to get that confirmation at this particular place, we are not looking for sell opportunities, right? Rather, we are going to be waiting to see what the market is going to do. But at the meantime, now remember, if the market gives us that closure, then we should be expecting more bearish continuation. What are we going to expect? Now we start looking for more continuation to the downside. Now on 1 hour, we cannot see any valid order block because this one has been mitigated with this week, as you can see, right? Okay, we still have a very good fair value gap there. So we could see the market. Okay, let's go to 30 minutes and 15 to see if we have anything there. Okay, okay, this high swept so many liquidity. So this high took out this highs, liquidity, took out this one, took out this one. So we could be considering this to be a very strong area of resistance. So if this market eventually closes below this, then we could be looking for that opportunity just at this particular place for more continuation to the downside. if the market closes below this low. Please take note of this. If the market close below this low, then we should look for that internal sweep of liquidity at this particular place. Let's just identify at this particular place, because this is a high, right? Then we should be looking for the market to use this as internal liquidity, coming to this zone before more sell continuation, right? So on GBP USD, at this particular place, I will be looking for that reaction at this particular place because of the 4 candles that have appeared. So first of all, I'll be looking for that change of character at this particular place, right? If the market will first of all come to this particular place, closing below this low. Remember, on 15 minutes it has closed, but I will not be considering that of 15 minutes. I will only be considering that closure on 1 hour or 4 hours. So on 1 hour, as you can see, we are not seeing that closure, rather we are seeing multiple weak rejections. So in that situation, we'll be waiting for that closure. If the market first of all closes below this, then I will be looking for that 3-to-1 risk reward at this particular place. I will wait to have a very good change of character before that particular trade, right? So that I will have a very good risk reward. Wait for it. Don't open and start targeting at the high side. I'm not expecting the market to go above this if the market closes below this. So I will just wait for that reaction to take that short trade. But if the market decide to come at this particular place first, I will be looking for that sell opportunity to the downside. So on GBP USD, you have to be very careful. I will advise that you can wait. Whatever the market is going to do, we still update you on Wednesday. But if the market first of all comes to this zone, I'll be taking that short trade of 3-to-1 risk reward and close it, because definitely the market will want to take internal liquidity. And if the market comes to this particular zone, then I will be looking for more sales opportunity from this particular zone and this 15 minutes order block that we are seeing. As you can see, we can see that very good fair value gap there. As you can see, look at that fair value gap, and we are having liquidity sweep just above the zone, sorry, below the zone. So this is what I will be expecting. And if the market decides to go up and close just above these highs, right, then I will be looking for more continuation to the upside, because this happened to be our very strong high. Remember, trading is reactive and not predictive. If you have not subscribed, subscribe, like, share, comment, because your share, subscription, and like motivates us to create more free quality educational content like this. And you can check my bio. We have finally created our free Telegram channel. You can click and join my free Telegram channel from my bio link. Without wasting time, let's proceed. Let's look at let's go back to 4 hours to see what. So on GBP USD, this is the first setup that I will be looking at this particular trading week. And remember, wait for that change of trend. Definitely we are going to be seeing reaction here, but if you didn't see it, just wait. On Wednesday we are still going to update you. Remember, trading is reactive and not predictive. We are definitely, after this reaction, we are going to be seeing more continuation to the downside, at least to come and cover all these gaps left at this particular place. So on GBP USD, this is what we are expecting. Then we have a very good setup on NAS 100 and gold. But before we come to gold, let's look at NAS 100. Now, on NAS 100, I explained in my previous video, I explained all the reasons why we should be expecting this low. Let's go to 1 hour. Why we should be expecting this low to be taken as our inducement, this low. Remember, this low did not sweep any liquidity. right? It did not sweep any liquidity. So I explained all the reasons why we should be expecting this low to be taken as inducement before more continuation to the upside. And I identified this as our strong low, explaining all the reasons why you should be looking for opportunity inside this particular zone. If market comes inside this particular place, why you take this to be your strong low and you target to the upside. So if you took this trade, possibly you must have made a very powerful profit in the market. But currently, what do we have on NAS 100? Now, when you look at NAS 100, let's go to 4 hours to see what is happening. When you go to NAS 400, you will discover that the market is already moving to the upside, right? We are expecting this market to break these highs to the upside. And as you can see, currently market is reacting from that particular zone. So when we move to 1 hour, let's see what is happening. Okay, this still remains our very strong low. Let's see on 30 minutes. Let's see on 15 minutes. So on NAS 100, as you can see, the market has gone from creating series of lower lows and lower highs to now creating higher highs and higher lows. After coming to this particular zone, right, that other block that you are seeing just at that particular place, the market reacted and continued moving to the upside. And when you look at it, right, we can be considering this to be a very strong low. We can be considering this to be our very strong low. Why? Because as you can see, this low, right, created this high, and that high right now has gave us this low. This low created a high without sweeping any liquidity. What happened? Let the market came back and take this as a liquidity. So this happened to be our very strong low. We are not expecting the market to go below this low currently. So we are going to identify it as our very strong low. So right now we are going to be looking for where the market is likely to react from and continue moving to the upside. Now, currently, we can see that we have a very good fair value gap at this particular place. So this could attract the market, and we have another fair value gap just at this particular place, right? So on NAS 100, because of what we already have at this particular place, I'm not expecting the market to go below this. But remember, trading is reactive and not predictive. So we are going to be looking at what is going to happen. But on NAS 100, I'll be looking for that entry just at this particular place, right? Just at this particular place. I will wait for that change of trend just inside. Let me look at 5 minutes. Just a minute. Okay, that's good. So we can adjust to this particular place, right, to have a very good risk reward. And when you look at it, you can see that we have this low that did not sweep any liquidity that created a new higher high. So there is possibility for market to come to it and use it as a liquidity. So we can identify this to be a liquidity or inducement that will be taken. So we can have that very good risk reward at this particular place. Our stop loss just below our low, and our take profits, we are going to be targeting 3-to-1 risk reward. Remember, don't be greedy in the market. So this high will be my first take profit. Then I'll be looking for that 3-to-1, 1-to-3 risk reward at this particular place. So on NAS 100, this is what I am this is what I am looking for. And if the market decides to come to take all these as internal liquidity, then I will be looking for next point of interest just at this particular place. Why? Because as we can see, when we go to 4 hours, let's see. Okay, let's see 30 minutes. We can see that other block that is there with a very good fair value gap, right? So the market could decide to, come and take out all those internal highs internal structures rather to come and mitigate this particular zone that is left unmitigated. So remember, trading is reactive and not predictive. So what are we expecting? We are expecting this to happen. First, take profit, 3-to-1 risk reward, but I seriously doubt if the market is going to come to that zone. But once it comes, just take note that this is a very good point of interest that you could be looking for that opportunity. Remember, trading is reactive and not predictive. So on NAS 100, this is what I am actually expecting this trading week. Then lastly, on gold, we have a very good setup on gold, right? So remember, gold has been respecting our analysis. We are going to delete everything we have here so that we can have a very good top-down analysis on gold. Now on gold, from what we can see how gold has been seriously moving to the upside. And I would recommend you go through my previous video because all these moves that we are seeing here on gold, we covered all of them. We covered this movement when gold came to this order block. After gold must have swept this internal structure, I explained all the reasons why we should be expecting more continuation to the upside for gold to create this new higher high, and that is exactly what gold has done. Gold has been respecting our analysis, and when you look at gold, gold always tests structure whenever it is broken. After this resistance was broken, gold turned it to support. The same thing happened at this particular place. After that resistance was broken, gold turned it to support. And here, the same thing. After this resistance was broken, gold turned it to what? Support. And currently, after this resistance was broken, gold turned it to support. So this is the behavior of gold. That is why I always say, always study the behavior of any currency pair you are trading before your analysis. So having seen all this right now, what are we expecting on gold? On gold, let's go to 4 hours. On gold, we can see how this market has been creating series of higher highs and higher lows. And remember what I said about liquidity sweep. As you can see, the market came back to take out all the internal structures created. It first of all came, let's go to 1 hour so that it will be more visible for us. Now, as you can see, we had this liquidity sweep. As you can see, gold first of all created this low without it sweeping any liquidity before breaking this high. On my previous analysis and video, I explained all the reasons why we should expect this to be taken as a liquidity, and that is exactly what gold did, coming to take out all these liquidity internal structures that we had at this particular place. Now, when gold was at this particular place, I explained why we should be expecting more continuation today upside. Why? Because gold gave us this reversal pattern that we can see. This reversal pattern of left shoulder, head, and what? Right shoulder before all these continuations to the upside. And as you can see, after each break of structure, gold always come to take out internal liquidities. As you can see, we had that liquidity break of structure at that particular place. Gold came down to take out this internal liquidity. Let's go to 15 minutes to see it clear. Gold came for that internal liquidity, as you can see. It came for this internal liquidity. It took it out before more continuation to the upside. And as you can see, after this break of structure, right, gold also gave us this low that swept liquidity without that created this break of structure without sweeping liquidity. What happened? Gold later came back, took out all the liquidity before continuation to the upside. Currently, what do we expect? Now, since we have all this happening on gold, what are we expecting? Now, when you look at what is currently happening, you will see that gold also has the same similar behavior of closing every gap left behind. Now, when you look at this, we discover that every gap left here during this move to the upside has been closed. Even when these gaps were left, the market came back and took out these these structures and covered this gap as a liquidity and a down movement. So currently right now, the only space or the only gap, fair value gap we have to be covered happen to be at this particular place, which is open price, which we could be expecting market to come to, because gold is currently still reacting at this powerful resistance level, though I'm expecting gold to make a new all-time highs at this particular place, but we should also keep this place in mind. But looking at what we currently have on gold, we can see that that's, okay, let's bring it back. This is the gap we have. And when we look at it, we can see that we have another gap at this particular place on 4 hours. And while we are going to concentrate more on this particular fair value gap that we are seeing here, is that that fair value gap have other block just below it, giving us more confluence why we should measure on what is happening at this particular place. Now remember, we just had this internal break of structure. And remember, after every internal break of structure, what do you expect? We expect a retracement or a test of structure before continuation to the upside. So when we get to 1 hour, what are we expecting? Now on 1 hour, you can see that this is a very strong area of order block. These are our very good order block. But remember, whenever you have any low or weak below order block, you treat all of them as one. And we are not expecting market to come down to this particular place, because that has closed door of the market coming down to this particular place. Why? Because this low swept all this internal liquidity before continuation to the upside, coming to this other block, which we shared the opportunity on our last video, right before this move to the upside, giving more room while we shouldn't be expecting market to go below this. This happened to be our very strong low. So in that situation right now, what are we expecting? We are now expecting the market right now to give us that liquidity sweep before we start looking for more opportunity. Remember, we just had a break of structure, and each time we have break of structure on gold always come back to take internal liquidity or lows that didn't sweep any liquidity. And as we can see, this low did not sweep any liquidity when we get to 15 minutes. So we are expecting this low to be taken out as a liquidity before we start seeing considering any move to the upside, giving us more room why the market has to come to this particular place before continuation to the upside. So my first point of interest on gold happens to be at this particular place, my low just below this low, and I can be targeting 3-to-1 risk reward, but don't be aggressive here because this stop loss is much. Wait for that change of trend at this point of interest before taking that particular trade. So let's try and refine more further below here. Now, when we look at what is happening here, we have that fair value gap also at this particular place. That fair value gap is also below this place that we want the market to use as a liquidity, giving us more confluence while we should be looking for more opportunity inside this particular zone, because we could see that possible reversal. Why? Because this low, right, swept a liquidity. Okay, let's see. Oh, it didn't sweep. Let's see. It didn't sweep, but it took out this internal structure here. This is a very good sign that this is also a very strong low. So let's identify it as a very strong low. All right. So this is a very strong low. So we could see the market reacting at that particular zone. So let's go to 5 minutes lower to see. So in this particular place, we can see that we have that order block. So we are now we have that fair value gap. We are now going to use this as order flow to look for that opportunity. So on gold, my second point of interest has to come to this particular place. My stop loss just below this low. Then my take profit just 3-to-1 risk reward is okay, which is targeting that external high. So let's refine. 3-to-1 risk reward is more than okay in the market. Remember, don't be greedy in the market. So on gold, these are the points of interest that I am looking at. So remember, always wait for that change of for that sweep of liquidity before taking that particular trade. So this week, top-down analysis, this is my setup on gold, what I am expecting on gold. On GBP USD, I'm going to be very, very skeptical here because we are yet to get that candle close just below this low, which is going to give us confirmation that the market is going to go more to the lower side of the market. So you have to be careful, wait for change of trend in this particular place to trade the market to this strong high, or you wait for the market to come to this strong high, you look for more opportunity to the downside after you must have seen the market close below this strong low. Then on USD JPY, this is the setups that I am looking at currently, and on NAS 100, this is what I am looking for. So remember, trading is reactive and not predictive. Always study the behavior of the market before taking the trade, and also be studying the behavior of DSY, because this is what gives you clue on how USD pairs behave against other currency pairs. I'm wishing all of us successful trading week, and remember to subscribe, like, share, and comment, because it motivates us to create more quality educational contents like this. And remember, we have finally launched and created a Telegram channel that is going to help us to grow more further. Check the link in my bio for more to join and utilize more opportunities in the market. Have a wonderful trading week, guys.